Hello, welcome to my YouTube channel. My name is Martin Adesi. Today I'm going to take you through forex trading, and we're going to cover forex trading. What is the meaning of forex trading and what you mean? When you see forex trading, what do you mean? What comes to mind? What can to some stage for you to get a clear understanding of forex trading when you see forex trading and some terminologies in forex trading so that you take your trading to another level. Right? 2026 is here, and we have to take the opportunity to learn a new skill for you to change your finances. Yeah. So let's begin. We're gonna cover uh, forex trading, the meaning of forex trading, currency pairs. That's the terminology when we see forex trading. When it comes to, we're gonna cover forex trading, currency pairs, trade calculation, loss size for it, and a lot of terminologies in voice coding when you say question, what kind of thing. So to cut everything short, let's start the ball rolling. I wrote something here. The meaning of voice trading. Voice trading is simply meaning, or also known as exchange of trading or foreign exchange. In simple terms, it's foreign exchange. Buying or changing money, right? It's the same concept. For instance, maybe I want to go to America, I will need the dollar, yeah, to for me to buy things over there. When I go to UK, the person, I will need a pound, right? When I travel to maybe Japan or Korea or China, I will need their currency, yeah, the yen, right? So the same concept applies to. You are buying one currency and selling another currency, and when the other currency appreciates against the other, you make a profit at the same concept. It's a very simple concept. So just like when you exchange money at a bank, the value changes, right? So we are mere speculators. We presume that maybe dollar is gonna rise. So when I buy dollar and against my city or against my naira, against my like euro or my currency, and the other currency appreciates, make and make some profit, right? Because the value of the other currency has appreciated, it has increased against the other. So automatically, the difference between the value makes me profit. The same thing applies to when I speculate that okay, oh, dollar is gonna rise, so I need to purchase more dollars, and dollar eventually decreases and make loss. It's business. The same concept, right? So in Forex, we take advantage of those changes. If you buy Euro USD and you are expecting the euro to rise against the dollar, if it does, you make profit. Simple. In other words, when you buy the euro and the dollar rises against the euro, you make losses. Simple. So, so the idea that in forex trading is like you do your analysis, your technical analysis, your your fundamental analysis or whatever system that you're going to use, you get there, right? We are starting from the start. So some terminology you are not going to understand, but eventually you're going to understand. I'm not rushing. I'll take my time to take you through so that you understand the whole concept of forex trading, right? So we speculate that maybe okay, dollar is gonna rise, euro is gonna rise. If it does, and I buy the euro against the dollar, if it does, if the euro appreciate against the dollar, I make profit. Right? If I buy the euro and the dollar eventually appreciate against the euro, I make a loss. Right? Simple. Let's continue. Sorry. Uh, currency price. Right? Currency price. Yeah. So when we say currency price, all currencies in forex are traded in pairs. Right? You can't trade only one currency. You need two currencies for us to trade, right? So, example, Euro USD, GBP USD, GBP, JPY, USD, JPY, a lot. The currency pairs are many. And in Forex, the first currency is the base, and the second currency is the code. So, in this case, the the euro, the euro here is the base, and the USD is the code, right? Yeah, is the code. So the first currency is the price and the second currency is the code, right? So if euro is trading at 1.1000, it means 1 euro equals $1.10. All right. There are three types of price. We have the major price, we have the minor or first price, or we have the exotic price. Right. The most traded price are the major ones, right? The Euro USD, GBP USD, USD JPY, GBP JPY. Those currencies are the most volatile ones. Those are the most traded currencies, right? And we have the exotic USD ZAR, USD, the Turkish, right? So the major ones are the most stable. And the exotic ones are the ones that they are traded less, right? The spread, those ones, the spread are very high. So the traders, or we the traders, or the mere speculators, you know, we trade the major ones, right? So let's go. You get along and you understand a lot. So follow me. Yes, let's go. Right. Just follow me. There's something called time frame, right? You know, in Forex, we have different time frames. We have monthly, we have weekly, we have daily, we have 4 hour, 8 hour, we have 2 hours, we have 1 hour, we have 15 minutes. Don't worry, take your time. You're gonna understand eventually. Just follow me. Eventually, you're gonna get there. Don't rush. Small, small, gradually. When you follow me, you're gonna get there. So, um, the time frames. For it start move in time frames, right? Each candle represent the time you choose. For example, we have the 1 minute, and we're gonna get there. We're going to get to the chart. I'll show you what it means that every candle represent 1 minute, every candle represent 15 minutes, every candle represent 1 hour. When we go to the chart, we go to the chart so that you understand what I'm trying to say. So the forex market is open 24 hours a day from Monday to Friday, right? And we have four trading sessions. The Sydney session, that's slow. Tokyo session, Asian price move a little bit. London session is volatile, and New York the most active. Yeah, so we have four sessions. There's Sydney, Tokyo, uh, London, and New York. But the most traded sections are the London and New York. When you get there, you're gonna see that the moves, the big players, those who have money, who move the market, the billionaires, the millionaires, those are the people who most traded there, the London and the New York session. So we have the time frame and the kind of trader that we trade there. That particular time frame. We have day traders, we have scalpers, those people, normally trade around the 1 minute and the 5 minutes, 3 minutes, they are scalping. They want to take a piece of, the market, right? And we have day traders, like, to trade 5 minutes, 15 minutes, 1 hour, like, we have the swing traders, like 4 hours, 1 hour, depending on the kind of, and we have position traders, right? They take maybe they go to the higher time frame, the daily, and they buy the currency and they hold for maybe 2 weeks, 1 month. They are the position traders, and we have the day traders, within a day, then they are done, or maybe two, right? And we have the swing traders too. Then 1 week, 2 weeks, and we have the precision traders. And normally you hold it for longer time. right? So bigger profit. So don't worry, you're gonna get it. Follow me. So when we say lot size, what do we mean by lot size? You know, a lot size is simply the size of your trade. When we say a lot size, it simply means the size of your trade. There are three main types. You know, the standard lot, that's one lot is equal to $10 per pip. You're gonna get the meaning of the pip, and you're gonna understand what I mean. And we have the mini lot, 0.10 is equal to mini lot, right? That's when you buy a currency and the currency move one pip, you make $1 profit. When it goes against your when it decrease in its value one pip, you lose $1, right? And you have the micro lot 0.01. That one is going to, a cent, 10 cents, you know, 0.02, 20 cents. So the higher the lot, the higher your profit. The higher the lot size, the higher your risk. When it goes against you, you're gonna lose. So we have the standard lot, So let's say, for example, you buy Euro USD, right? You are speculating that Euro will rise against the dollar, and you buy, let's say, one lot size, and it moves like say 1 or 2 pips. Automatically, you're gonna make $20. One pip is $10, right? So it's very interesting. Okay, within a short amount of time, you can make money in the forex or the financial market. You can lose money in the financial market. Whatever I'm saying that vice versa. I'm not gonna sell a dream. No. So when you calculate your risk well, you're gonna make money in the financial market. All right. So this is the beginning, and we have the PIP calculation, right? A PIP is the smallest movement a currency pair can make. For most price, it's the fourth decimal place, right? For example, Euro USD moves from 1.1000 to 1.1005. That's 5 pips, right? It's the fourth decimal place. So when you are counting from the fourth decimal place, that's 1, 2, 3, 4, right? So this is the fourth decimal place, right? That's after the point. Sorry, let's start after the decimal point, right? The fourth digit. So 1, 2, 3, 4. So this last zero, if it increases in value, to say this 5, it means the euro has appreciated 5 pips against the dollar. Get it? You don't get it. You get it. Let's follow. Right? So when the euro appreciates in value or move 5 pips, it means the dollar or is decreasing in value against the euro, and the euro is appreciating in value or increasing in value. Right? So how much is 1 pip? It depends on your lot size, right? So for instance, if the euro moves 5 pips and you use a standard lot, that's one lot size, you're gonna make $10. So, for example, the euro is trading at 1.1000, right, against the dollar, right? And you buy the euro, this euro, at this current price, at one standard lot, right? And the euro moves 5 pips, you're gonna make $10. You're gonna make $10, right? So when it moves 5 pips and you use 0.10, you're gonna make $5. So this one is gonna make $50. Sorry, this one is gonna make $50 because it moved five and you are using one lot. So you're gonna make every one lot is $10. So sorry, you're gonna make $50. That's $50. Right. You're gonna make $50. When you use one standard lot and you move five, you're gonna make $50, right? So and when you use one 0.10 lot size, you're gonna make $5, right? You're gonna make $5. And when you use this one, you're gonna make 0.5 cents. Simple. Right. So if you trade 0.10 and price moves 20 pips in your favor, you make $20. The same way it's you will use one lot size and it moves 20 pips. You multiply the 20, find one, you're going to make $200. Simple. So the more your purchasing power, the more your money, the more your profit, right? So example, yeah, the USD is 1.199565. Right? So the fourth decimal number is this one. That's the fifth. And the last this one, the yellow one, is the fifth. We call it fifth. All right. So in Forex, the the Asian pairs, right? The yen pairs, right? That one, the calculation is a bit different. That one is the second decimal number. All right. So this one, the yen pair, every pair that's associated with the yen, that one is the second, and the last one is the fifth. All right. So take note. That's the difference between the the pip count and stuff. So let's move on. So what do we say stop loss? What is stop loss or take profit? Stop loss and take profit are two to protect your money. Your profit. So let's say maybe you calculated that euro USD, you bought euro and you did your analysis and you saw that okay, the euro is gonna rise and you did everything. You bought. The stop loss means the price where the system should follow. Maybe you are not there, right? Because we have some people that when you take on a trade, they set their stop loss and they are take profit and they live there. They don't want to interfere, so they live there. Automatically, when you are down there and the price moved to a certain price level that you think, okay, when the price reaches here, I want to take profit. Automatically, when that price reaches there, the trade is gonna close. Maybe you're not there. The system is gonna close and secure your profit. The same way the stop loss is maybe you thought that euro is gonna rise against the dollar, and here comes the dollar rather appreciated against the euro. In this case, you made a loss. So you are trying to say that okay, for instance, I want to buy the euro against the dollar. If I am wrong, if my speculation is wrong, and the dollar rather rises against the euro, in this case, I'm going to make a loss. So the stop loss is it's a tool that you use to place in your trade so that you don't incur maximum or a lot more loss or major loss. Maybe you are using one standard lot, you thought maybe euro is gonna rise against the dollar. So in that case, you bought 50 lots, that's $50, you bet $50 on it and you thought that okay the euro is gonna rise. And you set a stop loss maybe $50, right? And you take profit maybe $150. So if the currency is traded and it raises $50 against you automatically. your trade is gonna close. You don't have to lose further, like say $100, $200. No. So the stop loss protects you from more losses, and the take profit also automatically close your secure your profit as soon as price reaches that price level. Because in your mind or in your analysis, you think, okay, when price breaks here, I want to sell my asset. Simple as that. If the price appreciate or increases to this level, I want to sell it. I want to sell it so that I take the profit. Then I walk away. When the price goes against me and it reaches this price level, I wanna accept the law. Then I move away. Simple. So stop loss and take profit are very important in trading. Right? There are some people they don't use stop loss. It's up to them. But you know, it's all up to how you're gonna trade. But I will encourage you to always use stop loss because you might not know what will happen, right? There are uncertainties in the market. So what is spread? How you say spread? A spread is simply the difference between buy price and the sell price. Price is the cost you pay to enter a trade. If GBP USD is 1.3089 and it sells at 1.3091, the spread is 2 pips, right? So the difference between the last digit and the last digit is what we use as for the spread. So this one, the 91 minus 89 is 2. So it means this, I'm coming, this and this. The difference between the price is okay. So the brokers, although there are some terminologies I'm using, maybe you are not familiar with it, I will explain to you. For instance, you go to the bank and you're going to exchange your currency, right? You need the dollar or the pound to do something, right? So when you go to the bank has their charges on the currency. When you say like maybe I want to buy pound, right? Yeah, against the dollar. You are exchanging your pound against your dollar. Maybe you have some pound, yeah, like when you sell it, the difference between the price difference or the price difference is what it call the spread. Right? And simple as that. The difference between the price or spread, simple as ABCD. Yeah. And the leverage. The leverage is your buying power. It allows you to trade bigger amount with a smaller account. Maybe you have a $2 account. When you use a leverage of 1:100, it means every dollar you have lets you control $100 in the market. So you might see the income in the market, right? So, so leverage allow you to a bigger purchasing power in the market, right? Maybe in your account you have only $1,000, right? But when you use a leverage 1:10, you can buy $10,000. You can trade $10,000, right? So what brokers do is maybe I have only $50. I can't buy much in the market. My money is too small. So what the brokers do, what the bank do, the broker is the middleman in the market. Right. So it's the one who take my trade, my orders from where I am to the marketplace. I can't go to the market. So the broker, I will need a broker, right? I will need a bank, right, to go to the market, to the financial market because he has a lot of a larger capital. So a broker will be the one or the middleman who assists me to take my penny or my dollar to the market so that what I make money, right, or I lose money, vice versa, right? So the broker will give me money, right? Let's say I have all 1,000. The broker will lend me maybe when I use 1:10 or 1:100, right? The broker will borrow me money to add to my dollar so that I can get or have more purchasing power in the market. Alright, so depending on the leverage, you can make more money. Depending on the leverage, you can lose more money. Right, so as we are going, you're gonna understand the meaning, the simple meaning of those terms that I am teaching you. So let's go. So I wanted to get to some charts, right, so that I understand what I mean. So this is DBP TPY. It has the pound against the Japanese yen. Right? So uh, this bullish, this blue candle, this blue candle upcoming. This blue, this one is called a bullish candle, and the black one is called a bearish candle. So, for instance, the price level is 205.588, and you bought pound. You're speculating that pound is gonna rise against the yen, right? So, and the price goes to say say 206.60, you make money. So the difference between so uh, so this place is called trading view. This is where you do other analysis. This is where you can do your analysis so that you can get your everything so that you can okay, maybe dollar is gonna rise, pound is gonna rise, pound is gonna fall. So this is where you do your analysis. Yeah. So this blue candle here represent. You remember we talked about time frame, right? So this is 1 minute time frame, meaning every candle here represents 1 minute. Every candle here is 1 minute. It's pointed 1 minute. When it comes to the 3 minute, every this blue candle took 3 whole minutes to print. This black candle took 5 minutes to print. This candle took 4 hours to print. So every time frame varies from different time frame, right? So the higher the time frame, the stronger the trend. The lower the time frame, the lower. So the time frame, remember we talk about time frame. So every candle you see over here took 4 good hours, right? You see this time frame, it took whole 1 week. That's Monday to Friday. It took this candle to print. This black candle took 1 whole week to print. This candle took 1 whole day to print. So in Forex, remember we talk about different traders in the market: the position traders, the day traders, the scalpers, right? So they play in different time frame, right? Maybe you are working, you don't have time to do a lot of stuff, so you might think, okay, I have to use 1 hour, meaning it will take 60 minutes to print this candle. That's 1 good hour to print this candle. Every candle you see here is one. So I was talking about your stop loss, take profit, and stuff. So, for instance, you can customize this. Another video that I'll do. Uh, I'm gonna show you how to use the trading view so that you get an understanding of everything. But this video is purposely the beginning of Forex trading, how we can get right. So this one is stop loss. The down here is your stop loss, and this one is your take profit. So let's say you bought a pound against the dollar, right? At this price level, 205.922, right? Remember the loss size. Remember, right? So and the stop loss and the take profit. So assuming your stop loss is this, the whole this place is your stop loss. This whole place is your stop loss. So when the price eventually goes up to this price level, it means you have made profit. When the price rather comes down, that's coming. Say you want to buy the pound against or sorry, the yen, right? You say you want to buy, and eventually you bought at this. Oh, pound is gonna rise. Pound is gonna rise, and the pound fell at that instant, right? You wanna buy to the up. You wanna buy to the up, and the price fall. You make a loss. So instead of you to go long, you went short, and you made a loss. So you have to do your analysis well for you to get understanding of what trading is all about. When the price goes up and you are in that direction, you make money, right? So in the next video, we're gonna learn what is called trend, right? We're gonna learn what is called trend. That's we're gonna learn a lot. So for now, we're gonna end with you remember to subscribe to my channel so that to encourage me